It's about that time of day again. My name is Joseph. It's Thursday evening, February 9th, 2017. This is your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening. Crude is bullish, but we have three clues on the chart tonight that tell us the most reliable buying opportunities are most likely not going to be until we see a trap low tomorrow. The E-mini S&P is bullish, and anytime we have a runaway like we saw today, we know exactly where and where not to be looking for the most reliable buying opportunities tomorrow. Gold is bearish, but one simple clue tells us this market has likely gone too far, too fast, and we're looking for a retest of that battle zone for the next selling opportunity tomorrow. Euro is bearish and trying to finish off a wedge target tonight, and whenever we see a wedge, we know exactly where to be looking for the correction tomorrow, so we're staying patient on the euro. The FDAX is bullish and trying to finish off a measured move, but we have a no trade zone lingering overhead and support levels below, telling us exactly where and where not to be looking for the next buying opportunity tomorrow morning. We have another great newsletter for you guys tonight. We've had a fantastic week, but another big day of earning opportunities coming tomorrow. Want to make sure you guys are ready for it. Before we jump into those charts, though, I do want to remind you the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of that YouTube video. Follow that link and come join me on the blog for the full-length version with all 5 markets and all the analysis. While you're here, don't forget to join the mailing list. I'll send you an email every evening when our nightly newsletter video goes live. Follow me on social. Any of those social media channels I'm posting throughout the day. Follow me in the lower left-hand corner. Right below the video tonight, you can download all the charts you see me using in tonight's video. Follow that link below the video and have my charts from tonight's video on your screen tomorrow. And of course, please don't forget to grab your free pass. If you're not a member here at School of Trade, grab that free pass. You'll learn more in 90 minutes with me on that free pass every day than you will anywhere else on the interwebs. I can guarantee you that. And please don't forget, we got a great frequently asked questions page for all the new members here at School of Trade, and of course, right, a live support tool if you have any questions along the way. It is great to be back here with you guys tonight, wrapping up this week of our nightly newsletter, Monday through Thursday evening. No newsletter tomorrow night. Another big day, though, of opportunities coming for a Friday session. Let's dig in. Tomorrow's Friday, February the 10th. Tomorrow we do have the IEA monthly oil market report coming out tomorrow. It's usually posted around 6 to 8 a.m. Eastern time, usually towards the tail end of the London morning session. So for all the crude traders out there, expect a little kick up in volatility tomorrow. That may bleed over into Monday's session as well. So again, it's the monthly IEA monthly oil report coming out tomorrow morning. Usually comes out just before we get started in our trade room at 8 o'clock Eastern time. Let's take a look at the news here we have on the schedule. No major news on the schedule here for tonight, so be aware of that if you're trading in the overnight Asian session. And of course, tomorrow morning, it's pretty much wide open here until we get down into that U.S. session. We got 8:30, the labor force survey from our good friends in Canada. Don't forget, they export quite a bit of crude oil futures, right, or crude oil out of Canada. So watch the futures market tomorrow around 8:30 a.m. Eastern time. And that's pretty much all we have, kind of a wide open session tomorrow, with the exception of that 8:30 a.m. news regarding crude futures. With that said, tomorrow's a Friday. We got the IEA report coming out for crude, so watch out for kick up in volatility in response to that. And of course, Fridays are always the same, early in, early out, right? We always know Friday mornings I'm in early so I can get out early. That volume will slow down after 11 a.m. Eastern time on Friday morning. So you're more than welcome to hold on to any open positions, but please be careful entering into new positions at the end of the morning session on Friday morning. Don't forget, right, we teach all this stuff in real time every morning in our trade room. You don't need to go at it alone. Come out and see me tomorrow. We open up at 8 o'clock Eastern time. Let's dig those heels in and let's get this plan set to go for tomorrow. Crude is bullish and trying to retest the high from earlier today, but we've already seen the bulls try 3 times to push through this no trade zone. So our plan is to stay patient and wait for buying opportunities down at the rising support trend lines at the low of this triangle. Don't forget, even if we do retest the high, we still need to worry about buying into that measured move. So the best plan of action is to wait for price to finish this attempt higher and use those support levels to gain the reliability that we need tomorrow. Really the most important couple clues here right now. We started the session off here. There was a short-term spike in channel. That spike in channel, of course, nice deep pullback, to make that new high. This, of course, turns into a larger channel, and that larger channel tells the buyers, wait for that deep pullback and buy it on the way back up. So right now, the bull channel tells us all the best buying opportunities, which of course we saw very quickly here today. All the best buying opportunities came after that deep pullback. So if you were patient to wait for the bulls, to reload at that deep pullback, you're in a great position right now, waiting for that target to be filled back up to that high. The hard part though is the objective right now is to get back up to retest that high of day. We've already seen them try once, twice, 3 times already now to crack through this no trade zone, and they haven't been successful. I really don't want to put on all that risk, only a little bit of reward up here at the highs. So the most important thing right now is avoiding the temptation to buy high and look for areas of support waiting below us, Those areas of support will be prior swings. Those areas of support would be trend lines. Couple trend lines on here, as you can see here as well. So really at this point, I'd like to get this price down around these lows of this triangle, if at all possible, bull triangle. I'd love to get this price down to the lows of that triangle. We have a trend line coming up off this low right now, but it's not going to give us much relief here because you got that falling resistance trend line there in the way. So whenever we have that resistance trend line, we're going to really want to make sure, again, find that support trend line. Really make sure we can get this price down into these support areas. That way we know we're going to be able to find the most reliable buying opportunities. The key to success in the bull market is finding areas of support where there's enough room for a nice big target for everyone, not just the tiny scalpers, but for traders with searching for bigger profit targets. So right now, finding this, again, this rising support trend line, the battle zone, this would obviously be, we'd love to see this price pull back and give us a chance to buy at these areas of support. Once we get to the area of support, then we'll start looking for failures, traps, breakout pullbacks, and possibly strength on the way back up to retest that high, as long as we're not buying into that high. What if we don't get the pullback? If we don't get the pullback, we're right inside that no trade zone, which means I'm going to have to really be careful, stay patient, make sure this market is breaking higher than that measured move, and of course that will take quite a bit of strength. What I don't want to do is sort of buy a pullback like this into that measured move, because it just won't be enough room for us to recruit all the buyers that want to participate. So it's either get that pullback back to the triangle low, back into the battle zone to buy it back up, or get this thing breakout, pullback, real strong breakthrough, and then we can look for the moving average to follow suit. And if we can get that moving average up above that measured move, then we have enough strength to begin looking for the proper entry triggers, to continue this move higher to possibly a triple measured move on the way higher tomorrow. Most important thing is stay to the bull side, don't buy high, look to buy at an area of support where there's enough room to go back up and retest the high. If we're talking about being a bear right now, we have to really be careful here for the bears, because with this move going higher, the inability to retest the high tells me a lot of buyers are going to be waiting, lingering down in this area. We're going to want to see a real strong move and then finish it, Really see that strength going lower. If we can get a strong move lower and then hold the pullback and continue that strong move lower, then we'll know the control has changed from bullish to bearish, and we'll be able to go hunting for that low of day that we saw earlier on today. Very strong move higher here. We're now just looking for opportunities here right now to buy without buying high. Let's keep going. Crude S&P. S&P's bullish and went on a big bull run higher today before finishing the double up target and trading sideways to finish the session. Whenever we see a market make a run like this, we expect to see a trading range develop on the chart as the market tries to find its balance. With that said, our goal will be to wait for price to pull back off the high highs, hopefully back into the battle zone, so we can look for entry triggers to buy it back up to retest the highs tomorrow. If price keeps pushing higher, it's done a couple times like this already this year. If it keeps pushing higher in back-to-back days, we're looking for a strong move through the highs and then focus on traps and failures to make sure we don't get caught chasing the move higher tomorrow. Whenever we see a real strong run like we're seeing right now, real tight, narrow bull channel, right? A breakout and pull back to retest the high. I call this a grind break, right? I call this a grind break, not a very deep pullback for the buyers. There are likely going to be quite a few buyers that are still waiting in this prior month high and the battle zone area to try to participate in this market without buying high. So that obviously is the most desired result tomorrow, is to get a nice deep pullback so we can buy on the way back up to retest that high. Another thing you want to think about is a lot of times when we see a big bull run like this, the market kind of tries to catch its balance, right? Catch its breath almost. And so it runs up and we start seeing a trading range develop. If we do start seeing that trading range, you just focus on staying patient and get that price below the range, right? Failure and back up, below the range, failure and back up. Really just focus on buying below that trading range. The one thing we know right now is I really don't want to buy this high right now. I don't want to buy into that double up as it goes sideways. So really at this point now, I'm keeping my eyes on traps below the 02.25, right? The prior month high at 99.5, the battle zone, looking for a trap low back up, pull back and failure back up, right? Dig in so we can buy it back up. And again, if we do get that pullback, we're then looking for failures, right? Failures get back above the moving average, right? Keep an eye on something like this. Obviously, if we just see a break, failure, and back, right? That is obviously the most aggressive buying opportunity. If it pulls back a little bit lower, right? Looking now for the failure and the breakout pullback, right? The failure and, of course, the breakout pullback as we try to catch this run, right? Going back up to retest that high. At the same time, like I said earlier, if it just runs higher here, this is where we don't want to get caught with these breakout pullbacks like this, right? We don't want to try to buy like that. That's not going to be a strong enough move. You know, the bottom line is the market reached its objective today. We need to see proof the market's hunting for another objective, and that, of course, would come with a very strong move higher. How strong? Strong enough to get that moving average up above today's highs, and then we can look at pullbacks, traps, failures from there. Then we can look at, on the next pullback, right, finding those proper entry triggers. We teach the entry triggers, of course, in the advanced course here at School of Trade, right? So the key is going to be, though, is got to really show us some more strength. We have to see proof that these buyers are hungry for more. If not, we don't want to fall victim trying to buy the high of day. So really wait for proof. And remember, what happens a lot is we see this run higher, right? We see the run higher. We see a pull back, not a deep enough pullback. It ends up trapping low, and then we end up seeing, right, the qualifiable entry, right, after we see that kind of break and retest, right, on a microcycle. We'll talk more about that tomorrow with all of our students, but make sure you watch for that strength, right, going higher here if it does go higher. If not, right, it's pretty easy. It's going to take a lot of strength to the downside for anybody to think about selling this market, and really we have our eyes peeled on really anything down below this low. I'd love to see us come back, touch that prior month high, failure into pullback to allow us to really sink our teeth into that move, right, on the way back up to retest the high. Pretty simple chart there on the S&P. The hard part's going to be finding a way to participate without buying directly into that high of day tomorrow. How about some gold? The yellow metal is tumbling lower this evening as it overshoots the low of this spike in channel. That's a big clue, and it tells us this market has likely gone too far, too fast, and the most reliable selling opportunities will likely come after a decent-sized correction tomorrow. The market is clearly bearish, and sellers are waiting up at resistance levels overhead, but a strong move higher off these lows may give control back to the buyers as they look for an overshoot in the opposite direction tomorrow. There is no doubt about it that these bears are well in control. You can definitely see here they were hunting for that prior week low. It's always amazing how towards the end of the week, we start to play into these prior week levels, prior week high, prior week low, prior week closing prices. So you'll see these on the charts. It really is amazing, though, how